Okay, we're all set. Welcome everybody, and another session of the Bookmap Academy where we'll go through your trades and give some feedback on what's happening in your markups, your journaling of your trading. This is the program. If you're not familiar with the program, go to bookmap.com, click on the More button here. Under Community, you'll see this link here, Bookmap Academy. Just click on that, and you can read through it, the steps, and this will inform you of what it's all about. If you have any questions, you can just reach out to us. I've got a few things to go through this morning, but we open the mic for everybody that we're covering their trades, and we'll let you explain to us what you saw, and then we will try to give the best feedback that we can. All right, so there's a few different things here to go over. One is right here, right away, in Discord. This is kind of important here. You'll see over in our Discord channel, if you scroll up to the top of it here, this verification button here. This will be required. You will need to pair your bookmap.com registered email in Discord in here, and you'll click on this button and go through the process. We worked hard on this to try to make it really simple for you. It's technically kind of challenging, but we did the best we could. All you need to do is you can just go over to bookmap.com and then log in here. And if you don't have a login, you can just sign up here. It's free. All you need is to input your email. That's it. You'll go through this process, and then you'll have access, free access to all of our Discord rooms. You'll open up the whole server, and we have streaming events every day. So this will have to happen by end of Friday, and all next week you will have to have your credentials and verified in Discord. Another thing, we have a new course. I've been promising this probably for a couple years now. So anyway, it's a new course on supply and demand on the Learning Center, and it's try to keep it really simple, really basic. It's all setups here. There's 10 setups in there. Probably add some more over time. And let me show you where it is. You can go to bookmap.com, and it's free and open to all. Click on Education here on the toolbar, and you'll see the course here. So click on the course, and then we've got 10 different setups in here to take a look at. Well, I guess maybe 9 setups, but how it applies to like VWAP trading, profile, patterns, indicators, going over absorption, exhaustion, understanding just supply and demand and balances, low volume pullback. This is one I'm going to really go over a lot, I think, in the the all markets webinar. Wedge patterns, flag patterns, a flag pattern with a failed breakout. Anyway, you'll see gaps, opening range breakout. David would love to hear your 1 minute opening range breakout. Anyway, this one is for 15 minutes. You'll see it all in here. They're very short. Okay, so I think the longest one in here is like 4.5 minutes, but you can see the majority of them are just around 2.5 or 3 minutes. So they're pretty dense. But anyway, enjoy. It's up, and we'll be going over them all the time in the webinars. Also, now this is exclusive only to the BMA members, Bookmap Academy members, those that are already members in either Junior Academy or Bookmap Academy, and the coaches. We will give you the free MBO bundle add-on. Okay, it's only for them because you guys have earned it, and we will be happy to give you 2 times the credit for your content as well, for if you cover stops and icebergs or whatever is in the MBO bundle. So if you already are subscribed to it, you can stop the subscription and we will prorate it. So if you already paid for 2 weeks and still have 2 weeks left, we'll give you back those 2 weeks. All right, so that's good stuff there. And then I was just talking to the coaches earlier about the process in here in journaling and building your playbook. That's the goal in here, is for you to build your playbook. You know what you're looking for. It's your style of trading. And what the Bookmap criteria is here is there's a quota, a quantitative and a qualitative quota to meet every week. And then just order flow markups. But this will include, we added a few things here into the list, an impetus, what's moving the market. It would be great to see that on your content. Also higher time frame levels, why you're looking at something. It might not be in the Bookmap chart, but looking at your higher time frame levels, and this filtering process will make your trading much more likely to have a positive outcome. Also, time of day, your checklist. We've been talking about the checklist for a long time, and that's been really helpful for a lot of traders. Anyway, building your playbook, and then also some progression. That we've shown this here, that you start marking up everything. After maybe a month or two, you only have a few markups. You know exactly what you're looking for. After another month or two, now you've got your specific setups. You know exactly what you're looking for. Anyway, that's the process there. I wanted to go through that with you guys. And let's jump in and cover. Let's see who's in the room here. Okay, welcome everybody. Let's see who we have here.
For me, good morning, good afternoon, good evening. I've got John and I've got DNT, who I can both see are in the room.
Okay. Let's see. Why don't we start with DNT? It's been a little bit. I haven't gone over him for quite a while. So DNT will invite you up here to the stage. And let me get the
deck up. Perfect.
Yeah. There we go.
Some great charting by DNT. This is a fantastic. I mean, all of you see it. You see it in the room, but really nice 4-chart storyboard. We've got the sort of, as I would say, you've got the long gun view DNT, which shows what's been going on in the market. I love the context setting that you're sharing in your notes as well. You're also a bit of sort of honesty on the sleeve about maybe we could have done this, I could have done that. As you've put in the chat, you've got plenty of ice going on, which I know you're going to talk to. You've got liquidity there that Stan loves, everyone loves, and you've got your checklist. But over to you, sir. Hope all's well.
Hey, can you hear me?
We can, yeah.
Sound good. Yep, you're good. So walk us through a DNT.
Yeah, this was your short the other day.
Yeah,
going through the London close.
I think I got some lag. Can you give me a mic check real quick? I heard you the first time, but I want a quick one this time.
yeah, there we can hear you.
Okay, cool, awesome. Oh yeah, okay. So this is great on the MBO bundle. I really appreciate that you guys provide this for us, because this is a really nice cue to watch for, but at certain levels. So yesterday I saw this. This was yesterday, right?
I think so. Yeah.
Yeah,
you posted it yesterday, so it was from yesterday.
Okay, yes. So yeah, this was from yesterday. So if y'all remember, we had this intraday strong move up in the morning, and the market just stopped right here. So this was the reversal. This was the reversal right here. And the market just couldn't get back up to this level again. And if you were trading the intraday trend, which was up, you probably would have been knocked out each time you tried to get this back up to the IB high. It missed the IB high here. Maybe one ticked it, and you can see all this ice just piling in. So it's at that century figure. It's at the high liquidity. level there, and it just didn't grab it. And this was the high of the day right here, and then the market goes to the opposite end of the so it goes to IB low, and then it actually goes lower than IB low, and then continues to the south side. And we basically create a whole new balance area below IB low is how we ended the day. So ICE has been a really good it's a really good addition, a really great addition. It's hard to get rid of it.
You can't unsee it, you mean? That's if we go to the next chart, Bruce, sorry to drag us around, that's the trading chart. So that's a nice bit of context you got there. You got the ICE coming in, and then this is actually where we can see some of your trading going on, can't we, DNT?
Okay. So I just got off the Wi-Fi. For some reason I'm like lagging, but hopefully it's not cutting out.
No, you're coming through good.
Okay. Oh yeah, okay. So this was the so the intraday trend was up, right? The intermediate time frame trend was swinging. It was swinging. So it was basically you're fading the rally. The rally was this morning where I just showed that ICE doing the reversal at the IB high, and that was the fade. That was the intermediate time frame fading the move up, and then it was hard to, like, if you weren't in the flow of the like an intermediate, what was going on. It was easy to take all those longs trying to get back to IB high, which is actually what I did because I didn't do my pre-market prep properly. And of course, it's easy to look back with clarity because the day's over and everything kind of already happened. But for me, it was clear when it broke IB low, and this was here at the London close, 11:30 Eastern, and you can even see it in the order flow in Bookmap. The order flow actually kind of tamed down a lot, and it was a lot easier to read after 11:30 Eastern. And it breaks IB low and then pulls back to IB high, and then these were the shorts, the pullbacks to IB high. So the way I look at it is the London close pushed down, broke IB low and pushed below IB low, and that to me is a weak London close. And usually when you see that weak London close, it's usually to me is follows through with some continuation. Whenever you get like a strong London close or a weak London close, it usually kind of stays in that direction, I noticed.
And they are quite variable. I know it states the obvious. We can about any sort of time of day, but there's some days London close is an absolute beast, and there's other days it's like I'm checking my clock, wondering, hang on, is the time wrong? It's that bad.
When it closes, if it were up and then it closes back, and then the London close is kind of just reverted all the way back to, like, mean reverted all the way back to the mean or something like that, then usually the London close, especially on low relative volume, we'll see a lot of chop within the IB range or something like that.
Yeah.
But usually usually it kind of helps a little bit when you get like a strong close or a weak close. It kind of gives you an idea.
Definitely. And obviously,
so it's helpful.
Yeah, definitely. These are obviously your setups, which is fantastic. Are you ever tempted when that price is rallying up? Because if you look on the first chart that Bruce was showing, there's massive volume coming in, driving that price up. Yeah, there it's around about sort of 10-20. You got massive volume coming up. As Bruce would remind us all, that these are the trades I love to take. Price is moving, bang, in we go. I've got the upper liquidity and I'm going. But I appreciate this is not your setups. But have you ever explored those sort of things at all?
Man, I was looking at that. I was still going through some that was beautiful. I was looking at that full session VWAP right there is the pink line, full session VWAP right where it was bouncing at.
Yeah.
And I'm like, oh man, this thing, because there's no if you look a little bit to the left, 10:15, the market's coming down on heavy volume. Yeah, there's no trigger, but when you see that bounce that the full session VWAP had, that's a pretty nice trigger, but it still is hard to enter into that. Don't get me wrong. And I see where you would enter above the RTH VWAP, right? Or right
Yeah,
there at RTH VWAP, right?
yeah, yeah.
Without that buy
Definitely
volume
high
just
risk. There's no
banging.
denying that. They are high risk trades. Yeah.
So
Well,
yeah,
something to think
it's
about
like
anyway. Yeah.
because I did. You're right, because that's a good question. Because I mean, it's okay. Do you want to interact? One, and if
Mm,
not, then you can stay out. Okay, so option one, stay out. Option two, you can take that risk at the full session VWAP, which is a bit iffy. You know,
yeah.
you had kind of have a trigger, so you can take that risk there. Or three, you can if you're in it, then you can add to
Hmm.
where you mentioned where you're
Yeah.
at, right?
That's it.
Or
Yeah.
you can enter, or you can just enter there. That's I
Yeah.
see what you're saying. That was tempting for me, man.
Mm. But they're different trades. This is the thing. The trade you've taken is beautiful. You've got the upper liquidity. You're planning what's going to happen. Whereas the trade we are just talking about there, more of my style, it's a reaction. It's an MMA type of trade. I'm not necessarily planning it. It's like, oh, things are moving, as I talked about last week. Off I go, so to speak. So yeah, they're different. Yours is a much more measured, calculated, safer trade. So I love those as well.
I see it. I could see your trade. It's pretty nice. And then you have the VPOC was kind of moving around a little bit there, but it
Yes.
shifted up a little bit, kind of putting a little
Yeah.
bit more pressure on the shorts that might have been in the market at that time. And then
Yeah.
yeah, it's pretty clean.
Yeah. No, it's great. Great trading. Let me throw the ball out. Have you got the mic there, Stan, sir?
Yeah, hey. Yeah, not
Good
much to
evening.
say. I think you highlight all the main things. Yeah, that's a great trade. I mean, you had your reasons to take it, and that's great. Um,
Fantastic.
I don't know, Vinny, if you have anything to add.
Oh yes, hi. This is Vinny. Yes, D&T, TNT, another dynamite chart you have. I tell you, you know how to pick them.
Yeah,
Beautiful.
But yeah, as far as what David has to say, I didn't really notice that in the beginning, but that was a good point that David pointed out with the possible long. I see some now. I look at it and I can see some passive orders absorbed as well as your VWAP. So it almost looks like a trader shark 1, 2, 3 pattern over here. Maybe he can chime in a little later and let us know.
True.
But yeah, if you wouldn't mind going to your next chart, if you don't mind that you had up before, please. Yes, that's the one. Yeah, great one over here, D&T. You have your strategy in place. Looks like your entry was right where your liquid resistance is. A nice job over there. And then you had your target at 5420 right at the liquid, and it just goes right on down to 5415. And yeah, you can just have your pick of them, couldn't you? So that was
yeah. Couldn't
really
get
nice setup. Sorry, go ahead.
yeah, couldn't get better than that. I was pretty lucky. Today was a bit the opposite. I was having a hard time getting. It would come up to my take profit and then just go down, and then I'd be like, "Oh, come on, man!" It'd be like maybe a point shy, so I'd have to.
Ooh,
Yeah, a
nasty.
little bit painful today, but yeah, no, this was yeah, liquidity targets below. Yeah, as we're looking at the liquidity target here, I took profit there, and the market kept going down a little bit more, but I was pretty much done at this point. I think we noticed liquidity kind of fade off uh, even more, and the moves were just kind of a bit erratic. Not erratic, but what do you call it? When the liquidity kind of fades, the auction doesn't auction as well as a normal.
Outstanding. Nice talent. Good strategy you have. It's like you're really honing in into your system here.
Yeah, big time. Really good.
I know. I wish I was able to kind of like monitor the low liquidity levels a little bit better. I know the CME offers or provides a service on their site to monitor the liquidity levels. Um, Otherwise, I think they were just saying that you can kind of tell low liquidity levels by the way that the market is kind of auctioning or the moves that are kind of occurring. And then you can look at the heat map itself, but it's a bit sometimes it is I mean, can you guys tell here that the liquidity is low? But
What?
like the relative liquidity was like 20% of what it normally is, from what I understood.
Okay. All I ever glance at if I chip across is just those volume bars when I'm sort of, as we've talked about in many weeks, I'm sort of glancing down whether that's an ETH or RTH, and like today when the market started on on RTH, it did seem fairly low, but it's a qualitative low from David. It's not a, I've got things on my whiteboard. It's just like, damn, that's looking a bit low. If Jack was with us now, he often shouts out stuff in Discord about sort of various volumes. I'm not sure where he gets his data from, but he often talks about things like that a lot.
I've seen that. Yeah, I'd be interested to hear.
Yeah.
I can chime in real quick. I actually have a little
Please.
bit of a program that has this as well on there. And I think today's volume, for example, was 89% of the daily average. So I have something that shows it. But anyway, just to throw it in there.
Yeah, do.
Yeah, very nice.
Yeah.
Would you mind explaining a little bit of like what do you use or how?
Yeah, it's actually a program on Thinkorswim that I have a study that I can implement it into my subchart that shows how much daily average and what the daily average, for example, on the MES or the ES, and it shows what the volume is of today, like what percent. So now it just went up to about 90%. So just about average for today, almost, maybe just a little low.
Oh, that's volume, right?
Correct.
Oh, okay. I meant liquidity. I'm sorry.
Oh, I'm sorry. My apology then.
No, that's cool. I do monitor relative volume though, for sure. I mean,
I was talking volume, wasn't I, as well? My bad. Bruce, catch us, please. Monday morning quarterback, Mr. Pringle.
Oh yeah, I'm an expert at it. No, at D&T, what I do, and maybe some others like maybe want to chime in, is, obviously the heat map and the color will give you some hint, but I always look over at the COB column as well, and it's like, okay, what does that mean? What does that red mean, or what does some of these areas mean? What is the numerical value behind it? And it just kind of gives me a feel for the day, depending on what you're trading, like I don't have any sort of like whiz bang indicator or anything, but it's just like you have a feel for it. Like, how much is in the ES, the NQ, gold, and crude oil, etc. And then you start to look at it and go, holy cow! You don't even need to know that the NQ is extremely thin right now. It's in the heat. It's in the heat map. It's just like it's like almost binary. It's either on or it's off. That's what I do. I don't know if that helps, or if anyone else wants to kind of jump up and or has any kind of comments on that. But it's very unscientific.
Okay.
I echo Vinny and David on. Well, first off, this is just. I really like the way you lay these things out. This is just beautiful. This is almost like artwork. Thank you for that. And then it's very clean and clear, and that helps. That helps a lot, I think, with journaling, and it makes you kind of go back and look at it. I would also suggest, though, that you were looking for the day, and what day was this? Well, mark it up. Put it on your chart. Jack has told us about that since day one, basically. So when you go back and page through these things, you know what day it was, and that might be helpful for you. The other thing is, like, what I echo of Vinny and David is, like, this is almost seems like a leap forward, big leap forward for you. You've got your you've got your checklist, which you've kind of honed down, and now you know what you're looking for at your levels, and then you manage this really well too. I think you'll hone your management as well. You kind of down here at the bottom of this range, right in front of it, you take some off. You let the rest run. You've got your high liquidity levels here, of course, but you got out a little bit in front of it to just reduce some risk, and then you got stopped out up at your break even or so, right? Is that correct? Or it looks like you took some off here as well.
That's an ad.
Oh, this is an ad.
So I did scale twice, but the reds are ads to the short. Number
Ah,
3, and then the number 3 again.
okay, okay,
Yeah.
okay,
Because the IB low is actually the one that you just marked there.
okay.
And I had a zone there that I was anticipating it to pull back to. So I did have to move my stop, but since I had to move my stop, I figured it was okay since my target would still give me like at least a 1.7 risk reward. So, and if this presented an opportunity to add, then I'd have even better. And I did get the fill, but I wasn't able to move the take profit in time. It just pretty much scaled right out.
Okay. I would be really careful with the adding in like that, because this worked out beautifully. However, maybe it wouldn't, and all of a sudden, like, you're in a big hole if this goes up. So yeah, just something. I mean, you may consider, like John. Oh God, let's just invite John up.
Why not?
Yeah, if you're game, John, we're going to cover you next anyway. But you know how John has a very and he's learned it. He protects himself. He takes some off like you did, or you know then he is looking for a runner to build his account, but he pays himself. And this way, like, he's always making some money, and he's also, if it works, then he's also building his account. But he's not taking the risk of it going against him. In fact, he's extremely tight with his stops. I'm not saying you have to do that, but like, I mean, I think this is one of the number one things that just blows out accounts, is adding.
Well, you could take a look at the break-even indicator there too. It's the gray line. So I
this
use that
this
as a
this one
guide.
this one here. Okay,
Yeah.
okay, so you're good. You're good. So never
So
never
I
never
use it as
mind.
I use it as a guide to kind of get ideas, and it's super helpful if anybody doesn't have the break-even add-on. I highly recommend it. You can see, like, I got the scales and then the mark, and then it gives me a little bit of theoretical average I can kind of play with a little bit.
Yeah.
And then if the price pulls back and you want to get in at another level, it kind of gives you a little bit of an idea of where you're at risk wise.
Okay. Okay. So my bad. It was worthy, I think, just to mention the kind of trade management in general for everybody.
It is,
Yeah,
yeah.
good point.
It's a good point.
Very good. I mean, I am partial at times to doing the similar thing of spanking a few more in to get a better average. But yeah, it's rolling the dice, that's for sure.
I mean,
Yeah.
we all do it.
Uh,
Jeez, I mean, like, I'm notorious for doing it.
Gee Louise, here we go. Love it.
Yeah, yeah. But it creates really bad habits that can really, be hard to overcome, or it'll blow you out.
Yeah.
Anyway,
it takes practice. It takes a lot of practice.
Yeah, yeah. And again,
And a good idea of like what your context is.
Yeah, true. Very true. This is where John will tell us off. John, won't you? How are you, sir?
Fine, sir. How are you?
Good, good to see you, buddy.
Along that line of thought, I was right with you, Bruce. Until if the add-on goes bad, I get out,
okay.
regardless of whether I can finance it or not. That's how I do it, because I can always get back in. But I don't like to. I trade right off the chart, and if the chart tells me I'm off for that add-on, I just get out and re-enter.
But do
I don't
you
let
just get out of the add-on, or do you exit?
of the add-on.
Okay.
Of the add-on.
Okay.
What
Gotcha.
I'm saying is that the add-on failed in this case to me on my chart. And I say, oh, darn. Okay. But I'll still work this. And there's nothing wrong about getting back in, but I don't want to, the chart's against me for that add-on and I want out. That's the only difference that I would do with what you were saying, which was kind of what you were talking about. And so, yeah, that's the only thing I would say.
Yeah, great. Great
You know what I'm
point.
saying?
Yeah.
Yeah.
So anyway, my last comment is just reiterating, DNT. This looks really great. I mean, like you really you put everything together in here. You're like really honing your plan, and it's really great to see.
Yeah, it's taken. Yeah, appreciate it. So with the context, I don't really have any like cause for reversal here on the low, which is what kind of gave me not the confidence, but the idea to add and to move my stop up a little bit higher, uh, towards to kind of utilize that theoretical average a little bit, anticipating it to pull back to the IB high, which was also a zone. So I didn't see any like absorption zones at the bottom. I wasn't really anticipating it to move back up, but yeah, no, you're right. It does take practice, and the break even add-on helps a lot with kind of giving you an idea of where you're sitting at risk wise. So so yeah, practice and context, and I mean I get it wrong still too. So and I know exactly what you're talking about. Yeah, appreciate it.
Yeah, well deserved. Well earned.
Yeah. Well, thank you, DNT. Any other comments, guys?
No.
Yeah, John, anything to add, please?
Oh, perfect.
Nope.
Thanks.
Oh, go to the next chart. This was
Not
this was
one.
the
Sorry.
yeah, it was the intermediate or the I'm sorry, not the this was the zoomed out on the actual chart. Yeah. So that was the reversal at the high. It breaks below the IB low, which is that yellow line there, the yellow dotted line. And then yeah, right there, yeah. So that's where the trade took place there, to your right.
Over here?
Below the yellow dotted line.
Oh, here.
To the right. Yeah, right there.
Gotcha.
That's kind of where it all happened there.
Okay, got you. Yeah, really nice. This is a great setup in here. Gets below it, retest back to it. On your higher time frame, I mean, like, you can look at this as that low low volume pullback. So right to where it broke down from. Anyway, this is something like I had mentioned. I want to go over a lot more in this new course here. This low volume pullback, because it's very flexible. You can use this on so many time frames, and it's a great way to add into trades as well, or just scalp. Anyway, we'll go over more and more about that.
Nice.
Hey Bruce, I just as Vinny once again. I didn't see that third chart that he had up over there until you just posted it up right there. That's actually a really good position that he entered. I didn't notice that because it broke out of the consolidation down, and then you had your pullback, just like you mentioned. Yeah. So that was even better than what I noticed before. So good one.
Oh yeah, and then go to the image right below that one. Then this is the intermediate time frame here, and then there's the good old Vinny trend line break right there.
Nice.
That's
Great
on a
job.
range chart. That's a 40 tick range chart there.
Okay.
Very nice.
Yeah, beautiful stuff. All right, let's move on. Thank you, DNT.
Thank you, DNT.
We'll
thanks, guys.
move on to see. I think you said John is who you have.
Yep, I've got John next. If we
right.
segue into that and change gears.
All right. Let me get him up here. Hold on.
I've got John's couple of gold charts here, John. I've got a ninja chart, which we rarely see from you, so it's good to see a ninja chart from you. And this is through the London Open. So I've got the ninja and the Bookmap chart. And then after that, we've got an ES chart. So, John, over to you, sir, please.
Okay.
If I can blindside you with this one.
Okay.
Yes, I know we're both trading gold together these days again.
This is gold. This is very early in the morning. It's just after 3 a.m. Eastern, right?
Yeah.
And it's just a trend line break. And I circled I squared off a consolidation area. And so at that point, here, right there at 3:25 or so in the morning, you don't know which way this thing's going to go, whether it's going to continue to the downside, or whether it's going to break to the upside. And so I marked that area off as a consolidation area, and then at that point, I move over to Bookmap and let Bookmap show me, how I can participate with this thing. And so I'm showing the same rectangle squared off area and Bookmap, and there's a few things here. First, we have some new liquidity coming in. Right when that consolidation is building, new liquidity comes in above. I have the first target marked, the second target marked, and the third target marked. And then liquidity below was canceled, down at 33.12 and even down at 33.08. So this shift in the liquidity balance positioned me. It just had me thinking, well, we might just go to the upside here. We might break to the upside because that's where the liquidity has changed gears here, and essentially that's what it was. Some pretty large ice came in at that point for this time of the day, this time of the morning, and so I got long with that volume. I carried it up for my first target and then just carried it up to the second and third targets. And that's, it was about as straightforward as that. Yes.
Beautiful. Because this sort of comes into the theme, Bruce, you were just broadly talking about sort of, pullbacks. The real V spike on the left of the chart is London opens, the price explodes up. It then, my phrase, it fades back a little bit into this consolidation area. As you say, John, there's some then shenanigans going on with liquidity. Bit of hidden orders coming in. I could roughly say there is a bit of a tiny sort of lower, higher low within that consolidation, but I'd probably get told off. And yeah, the rest is history. It's a lovely $20 move.
Yeah, like really I said, nice. Preceding this, like you talked about, that was a pretty serious run down. So this could have gone either way to me. So, and that's what's nice about Bookmap. I just look for those order flow events. And in this case, it was liquidity coupled with some large volume coming into the market, breaking out, getting that first target, allowing me to adjust my stop. Then it's just a matter of working through the rest of the trade up to the liquidity levels. Yeah.
And within that time of day, that first hour of the European bourses, markets getting going, eye on gold, what's happened overnight in Asia and so forth. Really, really good. Really, really nice.
Yeah, the risk to reward was there, so yeah, all good.
Yeah. Brilliant. Well played, sir. Vinny, sir.
Oh, okay. Yes. Thank you very much. Yeah, I'm here. I was actually looking at some of the charts with gold because I saw in the beginning of the week, Sunday into Monday, it had a nice trend break, and this thing ran all the way up to almost 3,500. So, but as far as this trade, that's I think a record high. But as far as your gold trade goes, yes, I mean you can definitely see you have your system in place. You hit your long. You're following the orders that are being pulled higher in your first, second, and third targets. And hey, you're spot on again. Your risk reward is in your favor, and there's really not much to add. So bravo to you. Nice going with you. Very mechanical. So nice going. Nice robotic approach.
Oh, really good. Stan, sir, please.
Yeah. But that is a good trade. I don't know if you have a checklist in this case. I was just wondering for this trade, and I'm wondering if you play a little bit with the intensity of the color with Bookmap. maybe will help you with gold. Um,
So
to
you
see,
mean filtering the heat map, Stan?
yeah, exactly. Yeah, but not especially using Map Pro, but even like with the general settings on the
Yeah.
top to
Yeah.
darken a little bit and yeah, to see maybe those liquidity better. Yeah, but good trade. I found maybe a little bit aggressive for the entry,
Mhm.
but makes sense if it was
Mhm.
part of your plan.
Mhm.
I don't know, bros, if you have anything to say.
Yeah, no, I mean, it's always so interesting to go over John's trades for a variety of reasons. The So I do have a question on a few things, but there's something in here that is really vitally important that we kind of covered in the beginning of the webinar about criteria for your trades and considering some of these things like let me get this slide. It's really this one here. Well, I mean, on John's charts especially, like you don't really see. You see him mark up. He's got a lot of great things on there, but there's things behind it that are making it so much more probable of unfolding in his direction. And the higher time frame, like levels, he's got his options levels, his impetus of like whatever he there might be a news moving market a certain way, and in this case, it's because it's kind of scary. There's a I use the word scary with John, but there's a couple of things in there that look a little scary to me, and it's this chart here, because this is a big strong move down. This is a low volume pullback here. Right back to where it kind of dropped from in here, and it's failing. I'd be looking for this to go back down, but
Yes.
this is the open though, or I'm sorry,
Yeah.
this is the open here.
The open's pulling it up, yeah.
So it's
Yeah.
the time of day here that changes this whole dynamic, and that's really, really big, and we don't see that in the chart. At least, that's what I don't see in the chart, and that is not here in a. I mean, I know John always has a checklist. I don't see it. I mean, he didn't have it this time, but like it wouldn't have been in the checklist necessarily anyway. He'd be looking at other things for the mechanics of the trade. And just fascinated. I just love the way that it's like, okay, well, which way is this going after the open? They're canceling here. They're adding here or a little there, here and here. And John sees that. He's just waiting for this to break on some high volume. Funny thing is the high volume's on selling. That I did have a question on for you, John. But that's it. Other than that, wow, it's really really beautiful stuff.
Well, going back to the ninja chart, absolutely. In fact, when I saw this, I was really looking for a buy sweep or something that would allow me to get short and continue downward, because that was a big move. It just didn't happen. And you're right, there was some selling and it didn't go. It reversed.
Yeah.
And so when I'm talking about getting long with the volume at number 4, there are some large volume bubbles in there. And then you can see how ICE chased it up. They were just biting along with that. That's what those series of blue dots represent, just above my buy arrow. That's a 100-lot ICE order that comes into the market, met with selling, but then it's still carried through. So you have the consolidation area, but the impetus that you talked about for me is the liquidity coming
Yeah.
into the market as the consolidation phase was building. We have liquidity coming up. If that liquidity doesn't come in, regardless of the volume, that trade doesn't happen for me. No way. And if there was liquidity below that trade doesn't happen for me. But the liquidity that was there, the little bit that was there, canceled.
Gone. Yeah.
Yeah. Yeah. Yeah. It's really great. I mean, how many people must have gotten faked out by this, you know, and just stopped out, thinking like, you know, this is going to continue to the downside. And, you know, here you are looking at it and it's like, aha, you know, here are the targets. This is where, you know, people are looking to get filled. And uh, just,
Yeah,
yeah,
and that
great.
was this thing. I always have my checklist there. I guess, 4 o'clock in the morning, I didn't, it slipped past me, but I always have that. And, you
Yeah.
can, at this point, you know what the checklist is,
Yeah.
by my numbers assignments. But, and then the other thing, if you see over there at the bottom at 255, there were a lot of sweeps in there, creating that reversal. And I didn't have a trade in there. That was a little too hot for me. And the gold market is that can get hotter than a firecracker. So that was a little bit too rich for me. But that did place in a nice bottom down there when you see those sell sweeps and those sell stop runs. That makes for a very nice pivot.
Yeah.
But like I said, a little too hot for me.
And not uncommon, John, as you know, to see the sort of those sharp moves just ahead of whether it's the gold open, Chicago gold open, oil open. It's sort of a typical move that you can see.
Right. Right.
Yeah, John, it's really, really fantastic stuff. There's another thing too that I'm just, you know, like you keep on changing and flowing with different, like different markets, different timings, slightly different strategies. Like now you're looking at diagonal lines. And you said, I think maybe a week or two ago, you're not really looking at those, or maybe it was someone else, but and now you're putting that into the equation too. And I don't know if you have any kind of insights for us, like how do you bring something new in, but keep your risk reduced?
You said this before, and every time you say it, I'm like, what the hell is he talking about? I mean, my approach is, very similar. If you look at my checklist, if you look at my progression, it's really market indifferent. I'm marking liquidities first. I'm looking for market flow events. I'm taking the first contract off. Now, on a ninja chart, what I'm trying to do with a diagonal line, I don't use it much in Bookmap. I don't see it with Bookmap because I'm focused towards liquidity. But in a broader scheme of things, looking at a larger time frame, I'll draw some lines in there just to kind of get an idea. But on the ninja chart, it was essentially that rectangle that I built. I'm looking at levels. I'm looking at horizontal levels, breaks, one way or the other. The trend line, yeah, like what he's showing you there, that kind of gives you a general idea. But you could draw a trend line either way. You could draw it up from the bottom.
You could.
But unless and until you break out of that consolidation box, that's the pivot. That's going to define where the pivot is in that rectangle box, not so much the trend lines. But I do use them on occasion, like I said. But I don't like the trade off of them. I know you refer a lot to them on the Bookmap charts, and I don't, because, like I said, I'm looking at liquidity. I'm looking at order flow events. But you have to adjust a little bit, but the very basic tenets of what I do, that does not change. No way.
Yeah.
No, it's the same numerical numbering system, and not much change. Not much changes in that respect. On occasion, I'll do some of the micros, and still, that's not a license to go out with a 200 point stop. My stop stays the same. When I go to a micro, level, what I'm doing there is I just want to reduce my exposure of getting on the wrong side of a tweet or a headline. But I'm still trading the same way. My stops are really tight because I'm trading off of order flow events.
Nice.
Does that make sense?
Yeah, absolutely. I mean, it's well, I mean, you're very clearly you're able to kind of jump from various markets where I think a lot of traders, it's like, well, I trade stock indexes. I don't know how gold moves. I don't know how bonds, move or something. Like, that's what I do, and they don't have that breadth, even if it's the same setup or not. But you seem to very easily kind of jump around. Yeah, and with the same setup, like you're saying.
Yeah,
very similar setup.
Same thought process.
Yeah. Great stuff. So anyway, let's see. Is there a few more in here, or?
There's a short here. There's a question here from Steve and John. Do you hold runners, or you're in, you're out to your targets and so forth? If I've read that right, Stephen.
And that's a great question. Yeah. If my targets are based upon the resting liquidity in the market, Stephen. So if I see those liquidity levels move, then I'll use that as a mechanism to move my target. But essentially, I trade to those target levels that I post initially when I enter the trade. But if, like I said, if I do see movement, I will extend my targets. Yes, and it's solely and entirely based upon the liquidity map. So what I don't do is follow with a stop and hope and pray that we go to the moon. I don't do that. Everything is based upon liquidity map.
The pucks.
The pucks.
We got to get the pucks in, haven't we?
The pucks. And then what's the other one? Your killer first sign.
So next one here, John. This is a short this is your usual regular sort of setup with your iron spot gamma. You got your liquidities. We got some failure here. We get your checklist in full-throated song and everything else. And that very nice tight stop of sort of 3 handles, give or take. Talk us through, please, sir.
David, would you mind going back to the hero chart? That really sets it up.
Great point.
Okay. Okay. All right. So there's a couple of things here. This is a hero chart of the S&P 500, and the index is shown by the white line, by the white solid line, and then hero, which is the change in gamma, is represented by the blue and red lines. And you can see that we've had a nice push up until about 52.92, 52.95. Oh, I'm sorry, up until 5,300 on the SPX and changed 53.10. Now, 5,300 was a huge strike for call buyers, and it's 12 noon, and these are 0 DTE options. So I anticipate this time of the day that we might see some selling up here, some monetizing of those positions, because when the option traders buy these options with a 5,300 strike, they're going to start to monetize at the money, because the rate in which they can expect those options to increase is going to go sideways, because they're right at 0.5 delta. Just the rate of gamma actually that they're going to experience with their position is just going to kind of level off. Now, we're only a few hours away from expiration, so now time becomes a factor, and the time expense is going to kind of weigh into their position. So what we see a lot, and what traders plan for when they trade these 0 DTE options, is to trade them up to at the money, 0.5 delta. So I was looking for this. And as we approached 1230, and as we approached that 5,300 strike, which is also 530 on the SPY, which was a huge level as well, we started to see these options being closed out, which means that the hedgers that had to hedge these positions, they can start to sell their positions. So you had the selling coming in from these options being closed out. And that's exactly what Hero is showing. Now, if the option traders thought that we're going to go higher, oftentimes what they'll do is they'll close out of their at the money, their 53, and they'll roll up higher. Well, we didn't see that here, because if they are doing that, Hero would reflect that. Instead, Hero dropped off, which means that option traders were not positioning themselves. They were not positioning themselves for higher prices at this point. And what's so nice about Hero is that it'll often lead this phenomenon. I had 5 minutes or so to get ready for an order flow event in Bookmap. And so the arrow shows where I traded, where I put my short, and you can see how far Hero pulled back. That sets up for the Bookmap chart. So if we can go to Bookmap.
And if I'm right, John, when we go to the next chart, today we saw that sell down, but very quickly, as you said, they rolled things forward, up. So it was it was the pattern you were talking about, but not, on that chart. Bad English from David. Yeah.
Mm-hmm. 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 So the next, let me go to the next chart as well. I can see it. Okay. So first thing I do is locate liquidity levels. Do we have liquidity levels for a target? We do. I mark those first. We also have a little liquidity above at 53.40, which is a bit of a caution. And so I mark that as something to remind me that keep my stop close here. And if my entry at number 6 fails, I could anticipate going up to 53.40. That's why I marked that. But we have liquidity below at 53.30. We have liquidity below at 53.20, which marks my targets. We had a bit of selling come in, a lot of selling come in, which I'm showing you with number 3. And that sets up for a potential pivot. Again, thinking back to my Hero chart, Hero's screaming down. We had a little bit of a run up, and then we had volume turn. And that's very characteristic of a hedger saying, oh, I don't need these hedges anymore. Let's sell the hell out of this thing. Now, I can't be for sure that's what happened. But that's what I see a lot of. And so when I saw that, I thought, okay, let me get an order flow event. And during these times where it's so volatile, I'm either trading with an order flow event or I really don't want to enter. And so here we get a buy sweep up in here. And that was a sweet place for that to happen. And so there's 150 contracts that came off on that buy sweep. And with the MBO data, I really like the sweeps, because what that's saying is that it's picking up 150 contracts off of one transaction ID, which means that order was originated by one trader. That came from one. It wasn't like the market pushed that up. That was one guy that said, I'm going to run these stops, which is what I'm going to run this sweep up there. So he moved it about 4 ticks, which is what the R means inside the buy sweep. And then it reversed, and it reversed with some volume. And that's why I entered. To take those trades all day long, because I have the first target down there with liquidity at 53.30, and then I just carried it down to my exit. Now, during the course in which that market was coming down, we had new liquidity come in at 53.25. which there are times in which that could prompt me to get out, to move my target. There's nice money to be made there, take the trade. But the reason I didn't in this instance is because the liquidity at my target never came off. In fact, it was building a little bit in there at that time. So I stayed.
Yeah. Love it.
That's it.
Yeah, deadly and simple. Simple and deadly. Yeah. Dancer, what do you think?
Yeah. Again, I find it very great. Nice to see your checklist. Plus your explanation. Everything makes sense. So yeah, that's great.
Great
I
use
don't
of
know,
the tools,
Vinny.
isn't it? Brilliant, brilliant. Vinny, sir, please.
Yeah. Yes. Okay, yes, John, nice. I heard that you mentioned you anticipated, in other words, you had a feel for it as it was occurring right around noon that you mentioned. So you move beyond just a mechanical approach and you really kind of, used an awareness with your anticipating and feel. Also, yeah, nice description on the hero chart. You're a hero for sure. And you had your checklist in there, which is really good. And I know Stan mentioned something about your filtering. I can understand that with your bubbles, what he was mentioning regarding that. I see that you're on a 5-minute scale. And also you did mention your sweeps. So there was a large player involved in that. So that was a nice notice by you as well. And yeah, another one, a nice mechanical approach. Way to go, and nice description.
Thank you.
Perfect. Back to you, Bruce, please.
All right, Bruce, ready for the bloodletting.
All right.
Yeah.
Jeez. I mean, like, no. I just have some questions, and
I'm changing my approach, and then oh my god,
yeah, where's the damn
David?
checklist? Like, God. No, I mean, I think what we're kind of, seeing here is like, this a feel for the market and the players in the market, and this is like mastery here. I mean, because this is very mechanical in here. We've seen this like on just about every chart that you're showing, and this what's key though, and this is critical though, like you mentioned, is like order flow events around your areas of interest. And now you have a feel for what this move is and who these players might be. And you also have your sweep that you're looking for. And then you also, and this number one on the chart, right, like, is the high liquidity. Do I have a target? Now, but the thing, like, again, like the kind of mastery or feel for things is this big move to the downside, as well as like this. That was just tremendous insight and a feel for how these markets work, and really, really beautiful stuff. I mean, to understand and start to piece together how these traders might react and how you might find an opportunity to take advantage of for an edge. And I mean, the only thing that I could think of, I mean, like I said, this is just it's outstanding. The only thing that I can think of is, like, let's see, you got out. Am I reading this right? Is this no, this is the S&P 500. I mean,
Yeah.
where did you get out on the chart? Because this is not right. Yours is like 53.20.
Okay, so this is the S&P 500. There's premium there of about 28 handles.
Okay.
Right, so the scale is going to be a little bit off. But the answer to your question is I got out at liquidity. But
Right.
I think I don't know if it carried through. I know it popped off of that liquidity level pretty hard. I can't remember if it went down further than that or not. I would have to look at it, Bruce, to tell you the truth. But
Okay.
what is your?
I mean, it's like I guess the point is yeah. I mean, you've got your mechanical targets, absolutely.
Yeah.
The question is, like, by getting a feel for this kind of bigger picture, is it possible to kind of trade in and out? I mean, I know you might not even want to do it. Like, it's just a lot of work. But if you get a feel for how people are reacting on those higher time frames, I mean, you can just continue to put on risk at a very low level. The risk reward would be very high to scale in and look for a bigger move. But that's just a minor comment.
Yeah.
But
Well, those century levels, they're huge. Everybody's looking at them. Everybody's,
Yeah.
"Ooh,"
Like
and
today.
there's a lot of option players in there
yeah,
that we're trading at. So that plays into it. But, I really need to, when you talk about the hero chart, Brent deserves a whole lot of credit. I mean, what he has done is truly pioneering work. And I think about that a lot when I'm trading gold. I'm like, gosh, what
Where's
am
my
I doing? I
hero?
don't have option flow. I'm like naked, and I don't like it, because it really does help frame up, where we are. And it's not just hero; it's hero, and then where those option levels are located. During the course of the day, where those zero DTE levels are, and Spot Gamma has built some tools now that are really focused in on that, and because they're running out of time, it, and so when they get to their planned levels, and you can see what they're doing, and that's part of my preparation work. I locate where their targets are, because you can see where the gamma levels are. That really does represent their targets. And so yeah, that helps, that feel that you mentioned, but it's very systematic. But I really do, I think Spot Gamma has done just a wonderful service. I know it's been a great partnership for Bookmap, and it's been perfect for me putting those two technologies together. Yes.
yeah, yeah, yeah. I mean, I'm wondering, do you so you speculate on what what this is or who this is, and the player. Do you think that is the same one over here?
It could be. I mean, who knows? And
Yeah.
that's going to my first target. I was glad to see it. You were asking me about, maybe doing a little bit more. If that same thing occurred after I get my first target in, I'd be in. I'd be adding to it. I want to get that first target off. I
I
want
see.
that to finance my risk. But I was looking for that, Bruce, and a couple of weeks ago when we were talking about scalping and how that's different, it really isn't about my program. What I do, what you just saw there, that's the scalp trade. When I have everything else in place moving in my direction per my trading system, if I get the volume entry into the market, if I'm not in the market, that's the scalp trade. You follow me?
Um, yeah, I mean, like, well,
And if I didn't have an entry up there and I wasn't in the market, and the thing was moving per my plan, I just didn't have an entry. I didn't have an order flow event, or I missed it,
Yeah.
whatever. When I see that volume coming into the market, sweeping through levels, then that represents the scalp trade. I bounce that, for a few handles.
got you, got you.
Yeah.
Okay, so your expectations are reduced.
Yeah.
Okay, okay, yeah,
Yeah.
makes total sense.
Yeah. It's just riding for 3 or 4 handles if it's there.
Yeah.
Yeah.
Yeah. I
If
mean,
everything else is in place, heroes screaming in that direction, and I have, for whatever reason, if I'm not in it, then I get in, and that's the scalp.
Yeah.
Yeah.
I mean, easy to see the left-hand side of the chart there, John, but where the words first target, where it scoots down there, you got the red volume bar picking up. Then you have that soft sort of pull up, and then we're doing lower lows. That's a lovely area to be scalping it down. There's other parts on the chart. I appreciate
Yes.
that as well. But
Yep.
I'm with you.
Yes. Yep.
Broken out that consolidation level, bang. Yeah.
Yeah.
Yep.
Beautiful.
Yeah. No, it's really, really solid. I don't know. I have no other comments. I don't know, Vinny and Stan.
Looks like I survived another day, David.
You've done well, mate. Well done, John. Yeah. We can leave the headmaster's office now.
Man, I can sleep tonight. Yeah, I'm worried every Thursday
Jeez.
morning. I wake up and I thought, man, what is he going to do to me now?
Jeez, it's been extremely complimentary.
Well,
And
now that you're feeling better, I got to knock you a little bit. I didn't want to say it when you were hacking your head off.
yeah, this chart scares me.
Oh God. Let me go bury my head.
No, it's really great. And yeah, I mean, it's like I was saying. I mean, this is like mastery here, and a feel for it, like, and a feel for the players involved, and that's a tough thing to achieve, and kind of wrap your head around. Every now and then, maybe we get an inkling of it, but like to really every day, or see that or see these things, and like it's like, yeah, okay, this is most likely what's going to happen here due to these players. That's just incredible insight.
Yeah, and that's what zero DTE has done for us. It really has created an opportunity for us that we have never seen before, ever.
Yeah.
No, particularly on that trace, if you're looking as well,
Yeah.
John, at the end of today, where just the buyers and sellers are just chivying around ahead of the Google results, which, as always, everyone knows apart from us, as Scott says, dumb retailers, but everyone else knows. And you could just see where the blue was coming in and the red was disappearing. So it's like, okay, we're going to scoot up. And boy, did we scoot up.
Mm-hmm.
It was easy to say. I know hindsight, Bruce.
I appreciate it.
Beautiful.
Thank you very much.
Oh, thank you.
Well deserved, John. Well deserved.
Yeah. Let's see.
So that's my two.
Okay.
My two wingmen, and I'm their wingman. All those words.
All right. Let's see. I don't know, Stan or Vinny. Do you see who you covered is in the room?
Only David is in the room.
That's right. You covered David.
Give me bold. Did you find any charts?
Stan, are you going to go and pick yours?
Well, you can go if you want, if there is someone in the room.
Okay, I didn't know if you want to do David. I'm ready for David's, but
have we got any checks as well in the room as well? Have we got?
I do have Shark Blue, and I don't see Greg in here, but
I see Shark.
Yeah, we can go straight to Shark if he's here.
Yeah. Shark's here. Shark's always here. It's fantastic.
Awesome.
So Shark, come on down. I see Laura. Laura's not in, but got Laura.
She's not, is she? No.
And Trading His Life said he keeps on getting booted out somehow. I'm not sure why. I mean, there's no one in here doing that or has that capability, and it should be fine. Anyway, we covered Trading His Life on the journal today, or the digest. So he's up here on the insights here, and yeah, kind of wanted to go over that because he's found a good one, and had his plan here for exiting and adding into it, etc. So some good stuff there. Anyway,
I believe
Bruce,
I'm audio connected.
yes.
Yeah, Bruce. If we just have a quick second, you mind bringing up actually Greg's first one right now? I just want to run through that really quick because it touches on some of the topics that you mentioned in your new video that you released. So if you wouldn't mind just bringing that up, I'll just whiz through that in about a second.
Okay.
Yeah, there you go. About 60 seconds. Yeah.
Okay.
So
sure.
if you just bring, if you don't mind.
Just
this was.
On, Shark. Yep.
Yeah,
Sorry,
this
Vinny.
was. Yeah, it's okay. No, are you okay?
Yeah.
Okay, good. Yeah, this is Greg's trade, and I thought this was a really good insight that he had on a couple of fronts. Number one, on the left side, the good about his chart here is he identified a long trade, and he also identified a short trade. He identified a book flip, a falling wedge, and lower highs, and he had his target. And I wish you were here because I would have liked to ask him a question: is why didn't he take this chart for a short? So what was really good about this, it could be even better, is that we see a falling wedge over here and dropping down, which he had very well, and he could have at his target down here at 52.20. But my question was, he didn't elaborate, and I would have liked to learn a little bit more about what his strategy would have been here for taking this long. Number one, we could have looked at an entry, for a break of the falling wedge, and also right into the low volume zone. Bruce had mentioned it regarding his videos that he put together.
Yeah.
And yeah, so this is just a quick touch on. I know it's a lot of stuff here, but I just wanted to bring this up really quick. So
If I cut in there, he does say in the chat, he's saying he is here.
Oh, he is here.
Yeah.
Oh, okay. All right, let's see. Where are you? Oh, there you are, Greg. Okay.
There he is. He's on his left. Okay, Greg is here. Awesome.
Cool.
There he is. He's on his left. Okay, Greg is here. Awesome.
Yes, hello.
Hi, Greg.
Greg is here. Awesome.
I have a problem because
we can hear
I
you.
listen in YouTube as well. But okay, can you hear me?
Yes.
Okay. So, what is your question exactly?
Hi, Greg. I'm so glad that you're here. Yeah, I know it's kind of late where you're up at night, so thanks for being here, and so we can go over your chart.
Okay, fine. Let's
Thank you.
go.
Yes. Okay. Yeah, I really like the way you identified your long trade here on the left-handed side. You talked about what I noticed. I saw you some passive orders, and yeah, your liquid target was really good. And I noticed the book flip that you had, and this falling wedge that you identified. And I was just curious. My first question is because you saw the liquidity at 520. I guess my first question would be, how come you didn't take this short? Because you identified some really good assets here. So that would be my first question.
This, if I remember, it is yes. I see my time. It's London opening. Okay, so I saw that the green dots in the big rip higher. You saw went up to take liquidity at 52.45. And then I saw the correction, and that's why I took the short because it was going down to 52.20 to take the liquidity to sweep. And during the falling wedge, of course, I would like to take the long, and I did. It's not in the chart because I trade in trade of 8, not in Bookmap. That's why you don't see the signs, but I think I pointed out.
Oh, okay. So you did take it short. All right. Well, great one. And
Yes,
then,
yes. I took the short and then I flipped to long, and actually I took profit early because that day ripped higher, if you remember. But okay.
wow. Yeah, that's terrific. I didn't know about that. I just read your sentences in the chat, but wow. Okay. So you did take it short. Way to go. And then also you took it long. I guess my next question would be is when you took it long, did you take it at the 520 or did you wait for some type of confirmation like with the break of the wedge? So that would be my second question.
No, what I do in general, I like to scale in and scale out. So I bought the bounce at 2025 and then added in the break of the wedge where you have this yellow rectangle, as if I see correctly. Yes.
Oh, okay. So
And
you
then,
actually scaled in.
yes, scaled in and scaled out above 45, 50, up to 70, if I remember correct, that day.
Okay, so you did take it all the way up to the looks like that was 47 up there. So you got 20 points out of that, and you went even further. So, wow, nice going with that trade. You got it both on the short and the long.
Yes, true.
Okay.
Tell me.
Yes. Yeah. Let's go right to Dan. 911. Help.
It's me, yeah. No, Greg, great to hear you. Great to see you here. So welcome. It's really nice having you traders onto the platform and so forth. I'm gonna rinse and repeat what I said, I think, a bit early on. So London Open time of day, as Bruce was showing on one of the slides, on the left hand side, when that volume's kicking in at what is 8 o'clock London time, 10 o'clock your time. Have you explored and played around with taking that bold opening trade at all, please?
What do you mean, the short?
The long. So when the London bell gets going, and we can see, as Bruce was highlighting there, where you've got the
No,
buyers.
I didn't take this long. I took the short and the long after. Why I didn't take the long? You asking?
That's it, yeah. Or have you explored taking those sort of opening bell trades on London time?
It happened if you see the long exactly before the open, and I try to avoid trading before the opening, 8 o'clock UK or 10 my time. That's why I didn't take it. Because I was working. I have this strategy. My background is I was a primary dealer in various banks for 20 years ago.
Nice.
So we had this as a rule not to trade before London opening. So this is following me.
That's okay. No, that's fine. There's not a wrong or right answer. It's just a theme I've had sort of, I guess, tonight when we see these. But yeah, no, good. Stan, sir, please.
Yeah. Yeah, that's great to see a checklist, to see a bit of context. I think you are highlighting the good things. I don't know if you already tried to go a bit in replay mode to maybe try out your setups or to do things, but that might be a good idea. Yeah, that makes sense, and you highlight.
No, I don't do the replay if you are asking me.
Yeah,
But also I would like to say some things in general, not for this trade, because I'm testing this bookmap for 1 month almost. I'm closing 1 month, I think, on the 4th of May. But I'm still not convinced that it helps my trading. I don't know. Recently, I had this chat with Dan, I think, with Bruce regarding icebergs because I bought the MBO bundle. But I'm not finding so much, how to say, it doesn't help me. It doesn't give me any edge. I don't know, maybe I'm used to see specific things in price action and my price action trader. So I don't know. What I like in Bookmap is that I see quickly the order blocks in the book.
Yeah.
But I don't know. I'm against Delta. Doesn't help me at all. The CVD. I don't know. But the MBO battle is not for me, probably. If you can help me or tell me something to look for how to use it, this would be good.
Yeah, I think we just had some examples just today in this session. I think maybe you came in late. I'm not sure, but
No, I was at the beginning. I saw them, but I believe it's cherry picking. For example, even if you use a simple moving average, you can find great trades. I think it's something like that in my head. I don't know. You understand what I mean?
I'm not really in this sense. Like a moving average, who's looking at it, what time frame, how many traders. VWAP, they are looking at usually one VWAP, but
yes, I'm looking at WAP too. Okay,
that makes sense to me. But like a moving average or a fib level, I mean, I doesn't make any sense really to me. But an iceberg or stop run, that's to me, that's very objective. And especially, I mean, you saw John going over an order flow event at a liquidity level or an order flow event at his level of interest. and he's waiting and watching for that to happen. If it does not happen, then he takes a small scalp. So that's how he's been using it. Maybe just more familiarity with it, or maybe it's like you said, maybe it's not for you, which is fine. But
that gold trade, so to chip in, that John took, where the ICE came in at that consolidation level, was a really nice compliment signal that John was reading the market right, despite the big pull down pre-open when London got going. Seeing that ICE coming in, you think, yeah, I'm reading this right. Someone's just dropping 100 lot in there. I'll have some of that. Yeah.
Yeah, this is Vinny. I was going to chime in real quick. Yeah, Greg, you yourself mentioned that you went after that target at 52.20, and that's also where you're entered right after your, for your long as well. So, that's one aspect that you just identified with the book that helped you with that liquidity at 52.20. But yeah, everything that's really put on this chart that, book flip that you can identify, you have the passive orders that help you to go long. Yeah, so, and then you actually entered in the low volume zone as well at 52.25 to go long. And then you also had your target that you talked about, right where the liquid is for 20 points. So there's several assets that you identified yourself, and yeah, maybe you just didn't realize that, hey, you're using some of the assets here that might help you even more, if that makes sense.
The other thing I would add in, without trying to sound like a Bookmap salesperson here, Greg, is that I've got Ninja, I've got Bookmap, and then I got my Spot Gamma. The thing I love about Bookmap is that it's a very fast performing system. Ninja, it's Ninja 8 is a 10 years old platform. It's single thread. I really do overload it, but I can always rely on Bookmap to be fast, speedy, allows me to zoom in, zoom out. I've got multiple add-ons going in. And as I was highlighting at the start, that trade on the left, which is a David trade when the London gets going, it just is so clear to me on Bookmap to take. That's for sure. But yeah, if you can keep it a little bit longer,
for
Greg.
sure, yes. Yes. I see what you mean. I was trading in XTrader, if you are familiar, back in the days when I was in the banks.
Yeah.
The platform that was developed by Merrill Lynch initially, and then it was sold. But okay, and Bloomberg, of course. I like Bookmap, as I said, because I can see exactly how the book. It's like an X-ray of the book. This is what I find useful.
Yeah, it's
But
great for that.
yes, and now as far as liquidity pools, you don't know how market will react there. For example, it's 50-50 if we'll take the liquidity and continue like it did in my chart, as you see before London Open. It went through various liquidity and big liquidity pools. Those those deep red, I think it was more than 200 contracts. And it didn't stop. Okay, sometimes stops, sometimes doesn't. I mean, you must use also other tools, and I don't know if
I do.
There are available in Bookmap.
Yeah, and if I bring John in, because I mean, John trades heavily with Bookmap,
Okay,
like me, John.
That day I didn't have bought MBO yet to see the activity of the stops and the icebergs. So I'm checking this MBO battle 2 days now. So, but I cannot find any edge for me, at least. I don't know, but I will keep searching and come back.
Greg, I think you might just want to put a little bit more time into it, because for me, the map of the book, where the orders are resting, Bookmap, it's essential. Because
yes, this is, of course, it is.
Yeah, not only
you can find it quickly.
Not only does it show you where it is currently, but it also shows you where it's been, so you can see the changes.
Exactly, yes.
Right.
This
So
is good, yes.
now the things that you mentioned in the MBO bundle, the icebergs, the stop runs, these are all, to me, they're nice things to build a case for a trade. But to follow the market, that comes from Bookmap. And that's why I don't have a lot of things on my charts, relatively speaking. I mean, Bookmap has a lot of things that you can add in and you can clutter your charts. To me, it's about that liquidity, because that shows you where they're interested in trading. And to me, that's indispensable. And so, lots of times even, Bookmap will come out with a new indicator and everybody will jump to it and say, icebergs, that's all I have to do. And that's not the case. It's a nice addition to build a case. And as far as your statement with moving averages or a crossover, they always look good at the end, always. And I have found them to be not effective at all in real time, because they will change. Mathematically, the way that they are calculated, they're always going to look good after the fact, because they build with new data coming in. With Bookmap, it's what you see is what you get. So when you come back and you review your screens, you're going to see exactly what you saw in real time. And to me, that's paramount, because I went years chasing that loop. It's like, why didn't I do this? Why? Well, it's because the screen didn't look like that. With Bookmap, what you see is what you get. Before moving off, I think I would spending a little bit more time just looking and keying in on that order flow, the liquidity levels. I think that's, to me, that's the best guide that I have. So.
Yeah, great stuff, John. Great stuff. Bruce, can you pull up my scribble chart from the chat, please? If that's okay. So thank you. So this is the close just now. This is the New York close and so forth. Those guys in Spot Gamma saw me scalping this up, and I took 6 contracts up right through, and it got up to about 10,000 of profit. Look at the ice. And as John said, I didn't trade this just on the ice. I had a whole lot of other voodoo going on. But when you see 2,133 contracts going on the dip, and I'm thinking of going long, I think, yeah, well, maybe I am. And as we touched on earlier on, I was looking at Trace and other bits and bobs going on with Spot Gamma. I felt we're going to go up, and we went up really hard. Really, really hard. So there's some really good insights, thank you, Bruce. And then you had another 1,000 one a little bit later. It's Now, sure, someone can find me a chart where this is happening and the market drops. Don't get me wrong. It's about confluence. It's about bringing it all together, all the parts together, isn't it, John?
Yes. That's the key word, confluence. Yes, sir.
Yes, for sure. But if I'm gonna make the devil's lawyer, for example, the first ice 325 didn't stop.
Yeah.
You see, it was keep falling. It's more than how much? 30 points. Yes.
Mm-hmm.
I'm not so convinced. The first ice above it was around price 55.02. 325
I think
contracts.
like what both David and John are talking about, though, is like, okay, so where's the liquidity, though? So it's a confluence. So here's very high liquidity here at this 54.90, right? And that's an area of interest. Now around that area, you've got massive icebergs being fully executed. So that confluence is where I think it is helpful, not the individual icebergs.
Okay, you have a point. Yes, true. You have a point.
I always try to explain it to people as order flow rules. It's the most important. The icebergs and stops are they're not signals. They're the order. They're actually the order types that are transacting within the order flow, and they are minor players compared to the order flow. I don't know if that helps, but because I was always, when we first came out with this years ago, people thought that these were like signals, and they're clearly not. It's more about the insights of the players.
Yeah.
So anyway, I hope it helps.
Yes, you must be in the mind of the one that is actually putting the iceberg, why he does this, why he hides his volume. You must think more, a little bit more, I think, to add to your saying.
Yeah, it's a good point. Okay. Any other comments, guys?
No, thank
No,
you, Greg. It was terrific, and we can move on to Shark Blue if you'd like.
Okay, thank you too, guys. It was
Thanks, Greg.
nice
Great talking.
participating.
Thanks.
Okay, thank you, Greg.
Thank you, Greg.
Shark, you're up.
Am I audible?
Yes.
Shark's a little lower there on the charts there, Bruce, but you're doing an awesome job. Thank you.
Perfect.
Oh, I'm sorry, I'm on the wrong one.
Yes.
Oh, okay. This
We're
one
going to test
or
your
this
chart,
one.
Blue. We're going to give you someone else's chart. Yeah.
Oh, so you want to start with this one?
Yeah, that one. I think that's the one. Yeah.
Okay.
Yeah, that's the
Okay.
one.
Okay. Great.
Ninth. The ninth.
Bruce, I tell you, you definitely you were recovering from your cold. Good going with that. But Shark, this is Shark. Good job on your chart over here. I really like the way you put your checklist in there. You identified your strategy and you labeled your assets, and you also had your target, which was really awesome. And then you also did your trade. You had your trend break. You stopped making lower lows. You talked about, and then broke out of the demand zone. We're looking at the right side of the screen here. Break out of the demand zone, and you had your reversal pullback and entry, and you had your target at 55 points, which was terrific. So that's just a really quick summary that you had over here, which is terrific. I did have one question, and just looking to the left, I thought maybe there could have been a potential first trade here. It also had a trend break and came out of the demand zone with a pullback, and it went right on up. It looks like you might have been able to get, maybe about 10 or 15 points out of that. And so that was my question. Were you not convinced, or with a potential first trade, or yeah? So I just wanted to ask you that, if you don't mind.
I've been doing something, Vinny, lately as the market's covering these wide expanses, as I've not even been at my screens for the open. So I'm moving in a little later. And I'm not, I don't have that emotional urge to chase that opening activity. So I don't know if that makes any sense, but
It does.
Adapting to this new market context is my number one goal. And for the last 2 weeks, I've taken very few live trades. I've done a lot of replay. I've done a lot of studying. This particular, this trade was a replay of a live trade I took. Of course, my execution's better in the replay. And this is me wrapping my head around trying to grab a much larger move in this market that's making me somewhat risk averse. I don't want to give back anything that I'm making, and kind of has me exiting trades that I didn't have to exit. And this trade, this is a bit different, as my entry is at my trendline pivot high, which is typically one of my targets, or my only target if I don't have a key level in that area. So I kind of went back to replay this. Okay, why did I get out of this trade early, and how could I trade this and ride it all the way to my key level supply up there?
That makes sense then. Yeah. So you were just a little bit, you're just waiting for the market to develop. That's why you just didn't take that first trade near the open. I understand. And I really like the way you talked about your replay mode. I mean, again, I did that. That's so valuable about Bookmap, is that we can go back and review it. I also like the way you use your demand zones and supply zones. And I think that's also mentioned in Bruce's new video. But yeah, let's go right back to, this is a summary real quick. How about we go with Stan?
yeah. As usual, I like the setup. Just great consistent. I don't know if we can have a look again on the bookmap chart.
Yeah, let's.
Yeah, but
Yeah.
yeah, we can clearly see good for the entry. Yeah, I mean, you have all your reason. Maybe the entry, as you said, was a little bit better during the replay, but
Yeah, my execution's always better in the replay, Stan.
yeah, I guess.
Perfect.
And, of course, it's curve fitted. I already know what price is going to do, but leaning into that as a learning process has helped my live trading exponentially. And there's no way I could have done that in the time frame that I have without leaning into Bookmap's replay feature, which is it's phenomenal. It's absolutely the best replay feature in any platform.
Beautiful.
Good to hear.
Yeah, yeah, it's definitely like John mentioned. I think it's very essential for me anyway for Bookmap. But yeah, let's go with Dan.
I love the stick chart, the first chart we had up. It's as we've seen throughout tonight. Those candlestick that gives you a real good feel. It's easy to see the higher lows here. It's easy to see, as you rightly pointed out, demand zones and so forth. And then on the Bookmap chart, you've just got those fat volume bars, green delta bars. You've got the bubbles coming in. Great reason to get on. I echo exactly what you said as well, Vinny, in terms of perhaps it was a slightly earlier trade, a tight earlier scalp, and that's been a bit of a theme we've also had tonight again, isn't it? But at the end of the day, checklists are checklists, setups are setups, and yeah, lovely to see you honing your skills even on the replay. So yeah, I'm with you because it's about screen time. If not that people ever really ask me about me, but screen time is everything. It's those reps and sets, Bruce, isn't it? Ultimately.
Yeah, I think so. The more and more you do it, the easier and easier it gets, and the more you're able to just react and also know how to manage the risk. It's like, okay, well, I know the risk management. Maybe this doesn't work out, but I know where, and then like look for the next one. Don't let it get to you.
Yeah, because you could spend an afternoon. Sorry, cut across. You could spend an afternoon on replay and just doing London closes or something. You could get a month in an afternoon as an exaggeration. It's a fantastic experience.
I've always been very gung ho, an opening bell trader. Like that's my time frame.
Love it.
The first 90 minutes, but right at the open, there's so much opportunity. And when this tariff tantrum war started, I got my ass handed to me, and just decided to lean into learning mode. One thing I've learned is I can be in learning mode,
Okay.
or I can be in performance mode, but I don't want to be in learning mode in my live account. I need to perform.
Yeah.
So I got to split those two things. I could always learn from my live trades after the fact, but I'm not going to learn how to trade the tariff war in my live accounts. That's not going to happen. So I put a lot of study the last couple weeks at, like I said, after getting my ass handed to me, and I'm just about ready to start attacking that opening bell again. The markets seems to be accepting what's going on, and a lot more tradable as far as my trade model. And I've come up with a couple things to keep me out of those mad book swings, those book sweeps that we get with random news events or tweets or whatever. So I'm just about ready to get back to work at the opening bell.
I love it, buddy. I love it, buddy. Bruce, can you pull up my random chart in the chat again, please? ORB again, traders today. So London time, 14:30, market opens. The horizontal, you've seen these charts before. The horizontal crocodile teeth is the 1 minute opening range bar. the pink circle area is where David got in today on the pretty much the opening bell. And however many 100-odd points we went later.
Damn.
And I took most of Spot Gamma traders with me, hopefully. Opening rate. So there you go, fella. Stick with it. Stick with playing. But I also do respect traders who don't want to play the open, and you know, whether it's Scott and so forth, and you just want to settle for 15, 20, 30 minutes, 40 minutes until you feel the market's giving you the right sort of signals. But ORB for me is the perfect tool. You can see the price scooted up, as it will do, and then it comes back down. It's coalescing around those crocodile teeth. I've got some voodoo on here. I've got a lot of stuff on Bookmap, which was showing me that we're going to go along.
This is the same. This looks like same price action to me, David. If you could we go back to the tick chart real quick? It
is carving those higher lows. Yeah, similar price action, isn't it? Yeah.
David, you got your second green jacket. Nice going.
Gosh, hot dang! Cheers, buddy. Respect.
The candlestick chart, Bruce. I just want to show David something real quick. That purple box at the bottom.
Yep.
Is our 1 minute opening range on this 400 tick chart. It looks like the exact same chart you just showed us.
It does, doesn't it? It does just, yeah. It certainly does.
I'm sorry, purple box. I don't see a purple box.
It's down at the demand zone. It's kind of behind everything.
This one.
Yeah, that's the 1 minute opening bar.
Okay.
Just transposed on the 400 tick chart.
Yeah.
Okay. See.
So I'm looking for my 1, 2, 3 reversal on the 400 tick in real time, but I've always got the 1 minute range on there along with the RTH open.
Beautiful, beautiful. John, sir, chip in. I know you want to. Sorry.
I just have a question, Shark. If we can just go back to the book map where you show the entry. Yeah, fantastic entry. My question is, I see where your stop is. Let's say that trade started to go against you. Would you let that come all the way back to your stop, or would you take it out? Because I see that as such a great entry that if it paused or took out that bubble, I would get out. I wouldn't take that down to your stop. Do you see it the same way?
Absolutely. So my stop, where my stop is initially placed, John, is never at a level. As soon as I enter, I just whack the other side of the price ladder and I plug in a stop. That's there in case I get that book sweep. If my internet goes out, that's just completely protective. Yeah. And then when I take a moment, I grab that stop on the price ladder and I move it to the level it's supposed to be at. But as soon as I enter, I just whack the other side of the ladder.
Okay. Yeah, because with the volume that's coming in there, I mean, that's either going to go or it isn't, and that's what I try to trigger my trades on, and you probably see it in my charts. So that's phenomenal. I just wanted to make sure that's what it was an ATR.
If that initial stop, like say I entered and Trump tweeted something and we got a mad book sweep to the downside, and that initial stop got hit, I mean, that would be a big loss. But at least it would knock me out of the trade before we run another 300 points.
Yes, sir. Absolutely. Okay, thank you.
Great question, John. Great question.
Yeah, I guess a question for the group, for our coaches: do you use a mental stop loss or do you use a bracket order stop loss? Dan.
Mine goes in straight away. There were years ago when I'm doing what some of you guys are saying. I get my order in and then I'm on the DOM and then I put in a stop. There's no orders don't happen on Bookmap or Ninja that don't put in a stop automatically. But I'm playing, as you guys often say, it goes in whether it's 3 or 4 handles, and then I'm sliding it around pretty damn quickly. Yeah, John.
Yeah,
I'm real quick with it. I don't have it. I do put them in manually because oftentimes I'm putting in my targets first.
Nice.
But it goes in automatically, and then I move it just like Shark was talking about. But I think it's essential during these times that you do have some kind of a stop in place, because you just never know, what could happen from moment to moment, especially after Trump gets his breakfast. So sure, absolutely, yeah.
Exactly it.
Yeah.
Stan, so how about you? What do we do in Belgium, please?
Oh, I think Stan has left us.
Oh, my bad.
Yeah.
Okay. You do both, Bruce, don't you? From
No,
what I recall.
he's back. He's back.
Yeah,
He's back.
yeah, sorry, I got a Wi-Fi issue.
Any the question to you was on stops and how you like to handle them, with mental or fixed, or how do you feel comfortable with placing stops and targets?
Um, hmm. For me, that will be about clearly the management behavior, like how much you're willing per trade to take, and then somewhere then I feel comfortable to sometimes leave a move. It might be like under structure most of the time, um, with some liquidity that I'm not looking for to get taken. But it has to fit the money management that I set for my roles.
Yeah, makes sense.
And Bruce, you don't need a stop because you trades are all winners all the time, right?
Yeah, right.
Exactly. Yeah.
No. I mean, like, I kind of, I don't know. I kind of got in a habit, and it was years ago. I listened to FT71, uh, and he said, well, the way that he likes to go in is he likes to like assess the situation. He gets in the trade, and then he kind of lets it kind of work a little bit. It gets a feel for it, and then starts to kind of his stops and targets. So he has them in there, but starts to move them around. Kind of similar to what you had mentioned, John. But it, it's I think it also depends on what it is you're looking for. If you're looking for this to work immediately, and maybe it's more like a scalp or something, then it's very clear. This is where you're wrong, or you get out, and this is where you take your profit. But if it's more of like, you're working a range, or like, I don't know, then there's more leeway to kind of assess. But that's the way I kind of look at
Mhm.
Yeah, great. And yeah, just to go back to Shark Blues, Shark, I really like the way you have your entire list of assets over there, and there's so much more that you can really add to yours. And and it really kind of depends on the trader and the strategy. I mean, you can pick and choose how many you want to use, but there's a whole bunch of assets that looks like that were available at least on your chart. So yeah, anything to conclude that you can give us any words of wisdom, Shark?
Well, I'd say find them higher time frame key levels, and then, like you say, use those other assets to get the tight entries, get in, get out, and find the next better trade. It's not a market to hang out waiting for a trade to roll over. And thanks for marking up the chart like this, Vinny. This is fantastic. I appreciate the work you put into this.
Well, you did awesome, my friend. All right, tossing it back to Bruce.
Yeah, I echo that, Vinny. Really, it's really great, the effort you're putting in, and Shark also tremendous effort, going back and using this replay mode. And you say it's not easy, it's kind of end of the day or whatever it is. Maybe you're tired, or like it's but you said and that exponentially has helped you, and
It has.
that's amazing. It's so great to hear. I mean, you're putting in the time, in the screen time. I think, like, maybe we have another session about that kind of stuff. But like, I think it's really important to, when you do the replay modes or anything really, and anything in life, I mean, what did you learn from it? Like, is there something that you can take away and mark down, write down, and like reassess that through maybe a different lens, and then move forward again? Because if you don't, then you know how it is with trading. It's Groundhog Day, and you're making the same mistake again and again and again.
Exactly. I don't know if you saw it, Bruce, but Carmine put up a video a week or two ago. I stuck it in the general channel, and he just really pumped up the Bookmap and its replay feature. I'll stick it in the I'll link it in the Academy channel. It's really good. But you know, Carmine's the one who originally brought me to Bookmap a long, long time ago, and you know, he's the one who got me thinking long ago that replay feature is really where I can level up my execution side of things.
Yeah, yeah, absolutely. I mean, like, then you know, you also, I think, can start to. It depends on if I find it depends on if you do it kind of immediately or you remember that day well, because then you kind of get a feel for the market again, even though it's in replay mode, and you remember like, oh, okay, you know, this is how actually that market played out. I was fighting it, you know, and it's clearly telling me that it wants to go up or wants to go down or whatever. And it can be painful to swallow some of those things just in replay mode. Yeah, really great application, Shark.
Well, thanks, coaches, all of you. I do appreciate you always bringing me up and giving me A-grade coaching. It really has helped me.
Kind. Welcome. Too kind.
Oh, Shark, I mean, another comment here. I mean, the reason why you're in here just about every week is because you're doing the work. It's in the spreadsheet. We're gonna cover it. That's what this program is about. You guys put in the work, and you have something to show. We're here to give feedback and coaching.
Fantastic. Thanks again, guys.
Yeah, guys, I think we can maybe, if there's any other questions or comments, I guess I had one more comment about the stops, and why I kind of took or heeded FT71's like input on that was, I think he said the same thing, was that it messes with his mind to see that stop in there, or you know, where he wants to kind of give it some breathing room before like and get the feel for how the market's reacting, and that kind of mentality when you you know, have a like your bracketed orders at like, you know, 6 ticks or you know, something. It's like, man, it can, you think, okay, this is it, here it is, and like you get in and it's like boom, you're out just like that, and it's just like, what the hell, you know? And then you do it again, oh boom, you're out right just like that, and then it does work. You know, maybe it just goes, you know, 6 to 8 ticks, and then maybe it just rotated a few times, and give it a little bit of breathing room, and mentally it's a little bit kind of easier to kind of digest, if that makes any sense. Anyway, that's my last comment. Any other comments, guys?
I would echo what you said there. Sorry to sort of ramble on, and it reminds me, I did say it last week when I was in Adam Grimes' trade room many years ago, Bruce, and those guys were trading gold, and I can't remember how wide their stops were, but let's say like, you know, they're $200-$400 wide sort of thing. And when I mentioned it, I'm not saying they gave the same answers you are on FT71 are, but it's almost like the stop is irrelevant. It's like we're going long here, David. If the market's going to go up, the stop's just in case something, you know, black swan event happens. I don't have the luxury of a trade like that, so I'm, as you've seen, and we talked about, like with John, when things are fairly on a tight leash. That's for sure. Isn't that right, John? Help me,
Yes.
catch me, please.
Yeah, absolutely. I agree. Yep.
But
John,
John,
I guess the last thing I'll just mention is a mistake that I made with replay. I was trying to get so much experience so fast that I would replay the days in fast mode, like 5 or 6 times. And my feeble-minded brain got used to it. And then the market opened and I'm like, okay, let's go. What the hell? It's like you're in quicksand. I actually had to go back and reprogram myself. And so the takeaway from that is that if you see something interesting, I bounce to it. I jump to it now, but I keep it in 1x speed. But that's
Nice.
just my
Love it.
feeble-minded self.
Nice.
Brilliant.
Right. So, John, with your really tight stops, so you are kind of doing the same thing. You're in, but you're watching very closely. You're setting your targets, which is going to take a little bit of time, and then you're setting your stop.
Yeah. Well, the targets that are far out, they're in. They're in as the trade is developing.
Okay.
Right, like my second and definitely my exit.
Okay, so you're not
Right.
using like a bracketed order in this sense.
I am not.
Okay,
No,
got you.
It goes right in immediately. I get something in there. In fact, I just pick a spot and then kind of like I guess what you were talking about. I see how things develop a little bit, and then I'll bring it in. Or if I see if I don't like what I see, I'm going to get right out anyway. But it's hard for me to use the bracketed order because I'm putting my targets in first.
Yeah. Oh, great to hear. Great stuff. Guys, another really great session. Thank you so much, coaches, and thank you, Academy guys. Really good stuff. Vinny, Stan, John, David, last words. Anything more you want to add?
Nope.
Thank you, everyone.
Thank you, everyone. Really appreciate all the great work, spreadsheets, and that. Great weekend ahead. Thank you, Bruce. Always a pleasure.
Thank you, Bruce.
Catching up.
I appreciate it.
Thank you.
All your work.
Fantastic.
Thanks, guys. All right. Have a good evening.
You too.
Likewise.
Thanks.
Take care. Cheers.
Bye.
Bye-bye.